You are listening to chartingwealth.com for Wednesday, the 6th of January, 2015. We look always at the beginning of our podcast at the total market as represented by IYY, which is an exchange-traded fund that tracks the total market. It's an iShares ETF. Why don't we use that? Because we like to see what's going on in the total market with all the stocks. And what do we see? Well, on our two-day chart, we see a big red down candle, actually plumbing the bottoms of where the market had gone back on the 14th when there was a big drop in things. What do we have happening over the course of this two-day candle that is firming itself up on the 5th of January? Well, we see a big move down on that candle now. The market rolled over back on the 2nd of December and has continued down, continued down to about the 14th of December, then slid sideways for a while and really took off on Monday when the markets opened back up after the new year on Monday the 4th. Continue to move down. Now, when we look at what actually happened throughout the course of the day, and on my charts now from freestockcharts.com, I'm actually looking at what happened. We saw some up movement during the morning, a little bit of down movement during the afternoon, but again, all that totally encapsulated by the down moves yesterday. Technically, 0.22% is what the market was up for the day. Now, again, that's not even 0.25%. If you want to call that a recovery, I wouldn't, but the market pretty much slid sideways. It did open lower than it had been yesterday. So what do we have happening? We have a confirmed down move on the short chart going in parallel with a confirmed down move on the big chart. What does that tell us it's happening? Well, we're waiting for some type of recovery or for a continued plunge. Do we have anything that tells us to trade right now? No, we don't. Unless you got in when the market rolled over right there at the end of the 31st going into the new year and were primed to catch that down move, you don't catch a falling knife. So until we have an up move in the short chart and a trigger going back down again to parallel the move in the big chart, we don't catch a falling knife. Now, next we will go to SPY. It technically was up 0.17% for the day. The big two-day candle shows a big downer ending on the 5th of January. If we go to the 4-hour chart, we can see what happened during the day and pretty much a sideways slide, all that moving encapsulated in the movements over yesterday. When I say yesterday, I mean Monday the 4th. I'm doing this podcast the evening of the 5th for the market as it opens on Wednesday the 6th. So again, same kind of thing. SPY represents Standard & Poor's 500. It continues to show that sideways slide that we saw with the total market. Now, what's happening when we go to the Qs? It was technically down 0.17% for the day, the exact opposite amount that the S&P 500 was up. What is the Qs? Qs represents the NASDAQ 100, our technology stocks. Huge move down on the last two-day candle, paralleling the down move that started back on the 30th of November in the Qs. Slid sideways for a while, dropped precipitously on the 14th of Monday, the 14th of December. Another big move down on the 22nd of December, then slid sideways, moved up a little bit around the 30th of December. Then, of course, that big rollover starting on the 31st and going on into the 4th and the 5th of January. Now, if we roll back and look at what happened intraday, there was some up movement in the morning a little bit and then down movement in the afternoon. Again, continued down moves. The short chart is paralleling the big chart. We have nothing to tell us to trade anything right now on our charts. We have to wait if we're going to trade any kind of down move for our chart to recover. That is for the small chart to back up. That means move back in the up direction and cross back over going down. If indeed that occurred, that would give us some idea. Do we see a bottom forming in the Qs? Well, for the last 2 days, the Qs hasn't moved below where it hit on Monday morning, the 4th of January. So maybe that's a bottom, maybe it's not. Let's just wait and see. The good thing about not being a professional trader who has to trade every day, we don't have to trade, do we? So lastly, we're going to roll back out to our 2-day chart. We're going to look at gold. What is gold doing? Well, we're starting to feel maybe a little better about gold. Looks like it's bounding up off its bottom. We had drawn a purple band on our chart around the $100.60 area, sort of being the downward movement of gold, and it's bounced off that. 2-day chart moved over, going up back on the 14th of December. Not the best of charts because it really didn't tell us a whole lot. It finally took off to make an up move over the last couple of days. If we go back to our 4-hour chart, look what happened intraday. We see that on the 4th, gold bounded up big time in the morning, not so much in the afternoon. It actually lost some of that gain, but then started stoking up throughout the course of the day on Tuesday. Gold crossed over going up. Again, your end point on gold would have been sometime in the afternoon on the 4th, that is Monday, the 4th of January, and it's continued some of that upward movement. Where's gold going to go? We don't know. We've got a tight trading range as far as the Bollinger Bands, volatility bands go. You want to find out what's really going on in the markets? What you need to do first and foremost is sign up for our newsletter at chartingwealth.com. What do you get with that? You get our layout from freestockcharts.com. We'll send you the layout. We'll also send you a link to our 15-minute How to Read a Stock Chart video. All that stuff's for free. And you'll get every day this recording, or a recording like this, our podcast every day. Plus, on Mondays, actually Sunday nights, Monday mornings, you will get our weekly review and forecast. That's actually the most popular thing that we do. We would love to hear from you. Follow us on Facebook and Twitter. Go to our website, sign up for our newsletter. We won't harass you. We aren't selling anything. And we appreciate you joining us every day, and we love to hear from you. So let us hear from you at chartingwealth.com.